Good evening, this is Dwayne Lowry for the DPP Grain Desk on Sunday, October 30th. It's not a whole lot here for news tonight. The European financial situation that had the attention of the markets for the last several days didn't have much for weekend news. Weather doesn't seem to be a factor. Harvest is advancing well in the U.S. South American concerns do not exist at the present time. There are no real storylines that are actually having any influence on a day-to-day basis coming from weather. Technical conditions are somewhat mixed. Last week's price action somewhat mixed in relationship to what people had hoped or expectations and ideas from people that have been looking for some sort of a seasonal bottom and an upside turnaround, and ideas that prices over the last several weeks had gotten to ridiculously cheap levels. People with that kind of a mindset probably were disappointed with last week's price action, especially believing that a positive outcome of the European situation as presented by outside markets showing strength. They were hoping that that would spill over into some dramatic move in the grains. Basically, you got a one-day move out of it, and that was it. In the case of Friday's price action was very big disappointment in beans, taking a big dump on Friday. Corn and wheat held in well after kind of a sloppy sideways performance, but closed relatively high range. Not big gains for the day, but in relationship to beans being down 18 cents, not a bad performance for corn and wheat. So you've got little here to inspire the market one way or the other. But that being said, the lack of an inspiration for an up move here, the lack of follow-through following some European positive developments middle of last week and some outside market strength, I think that there's a certain amount of disappointment is going to be found here this week, because we've gone into the end of the month, and I got new month starting up this week. People are going to hope that there'll be spec buying. I don't think you're going to find that, and the technical conditions still offer warnings of downside vulnerability. The market that people are most bullish and most want to see sponsor some sort of a rally is the corn market. The places that you finished Friday first traded on about the 12th day of October. So after 3 weeks of sideways activity, this correction process that began on October 1st is showing signs of maturity, and I think you're getting tired, and I don't think the market's going to take too much weakness before some of the recent longs start to hit the exit door. People started buying corn probably 3 weeks ago, well off the bottom of the market that was made October 1st. They got optimism on Chinese demand. They got optimism on European financial solutions possibly coming down the road. They got positive on hope that the Fed was going to issue another printing money session. None of this is going to be likely to be the case. The Fed has a two-day meeting that begins on Tuesday with an announcement at 11:30 Central Time on Wednesday, followed by a press news conference with Mr. Bernanke at 1:15 Central Time. With the GDP in the U.S. growing at a 2.5% annualized rate in the third quarter, the odds of the Fed printing more money with another bond buying program probably isn't very likely. So I don't think we got anything for positive news coming out of the Fed. Outside markets probably had about the biggest rally they're going to get out of the European situation. We're only set up for some level of disappointment from here forward on implementation concerns, delays, etc. So the technical conditions offer warnings. We could easily have a retest of our seasonal lows made around the 1st of October. In the case of corn, we're 75 cents above that level right now. I think that producers need to seriously look at protecting that risk or respecting that downside risk. Maybe we have higher prices coming. Maybe we have a situation in the late winter or the spring, acreage battle, things of this nature. Maybe we'll get a weather market next summer. Who knows? The question is, when's it going to start, or from what bottom does a rally begin? My concern is that if we got down to the levels we did on October 1st, my concern is we can go back down there again. Looks like an awful lot of risk. Producers have a very small percentage of their crops sold in relationship to other years. There's a lot of corn piles around. There's not been a lot of discussion about poor yields since the harvest began, which all of this makes me think that we run the risk of seeing a higher production number in the January final report. But more important than that, and more pressing and maybe more factually accurate is the fact that demand projections right now, the export sales we had last week fell short of expectations. We have tough competition in the world wheat arena that's weighing on U.S. exports there. We've got soybean export pace is very disappointing, and I think that we've got a lot of people hoping for bullish markets, but I'm not sure that we've got the meat here to deliver it. And if we're going to get a bull market, it may not be until the spring. So what's the market's downside risk between now and then? I think that's something that producers need to be respecting. So as far as tonight is concerned, I think we'll struggle to trade higher. I wouldn't say we couldn't trade higher, but I think it'll be a struggle. I think the market is beginning to roll over here. If that is true, and we start to see markets trade below last Wednesday's lows, I think then you start to see some tech selling energy increase, and people start to hit the exit door. And I'm very concerned about the market outlook here over the next 60 days, and I think the demand outlook for U.S. exports is certainly part of it, and I think just plain technical conditions, and I'm still concerned about the overall global economic condition that is not conducive to encouraging buying of commodities in the speculative arena. The speculative arena has been in a getting smaller mode for several months. I think that's going to continue. Look for a little bit easier tonight. Start looking at producers need to look at current price levels, consider them selling opportunities to catch up on some sales, and maybe reduce your exposure to downside risk here. For the DPP Grain Desk, this is Dwayne Lowry.